Welcome to AGORACOM Small Cap Best of the Best. This is George Tsiolis. I'm the founder of AGORACOM. This is our weekly show in which we discuss the state of the small cap market, our best small cap stock picks for the upcoming week. And as always, with me is our chief market commentator, Alan Barry Labucan. Alan, say hello.
Hello, everybody, and I've got to put this this new effect on here. I have sad news from my perspective, but you know, as we say in golf, every shot makes somebody happy. And our man George Tsiolis and I had a big contest. This goes on the back of our one earlier in the year. The one earlier in the year, I was victorious, but sadly to say, this one George smoked me badly.
So, Alan, tell me about the impact I've had on your life.
Huh?
Tell me about the impact I've had on your life as your mentor when it comes to these kind of stock picking things, and just give everyone about 30 seconds. 30 seconds of the humble, great impact I've had on you, and then we'll go over the picks, just so people can actually see the dominance. But talk a little bit about what it's done for your life and your spirit and your well-being.
Not only is George a very handsome man, but as he said, he's been able to impart some wisdom upon me, and I, you know, just like in that old kung fu show where the master held the pebble, and I kept on trying to snatch it in this last contest. The master, he's just too fast for me. So I will go back and try my hardest in the next contest. But we're going to go over it a little bit, our picks from this last one. In my case, talk about what went wrong, and in George's case, what makes him such a brilliant stock picker.
All right, so, and by the way, details, we made these picks on August 29th, and they were good right through to Halloween Friday, which is the Friday that just passed. Al and I do these every once in a while. The last one we did, we got to do more, was tax loss selling season, and Alan alluded to that earlier, where he returned 47% in 60 days, and I returned 33%. So both of us, to eat a little humble pie, didn't do as well this time around. But let's get to the numbers here. So let me do a screen share, bring this up so everyone can see exactly what you and I are talking about.
And George, to be straight up, I think the one of the seasonal plays that are very attractive is that end of the year tax loss selling. Stocks get really beaten down.
Actually, Alan, sorry to interrupt you. Look over your right-hand shoulder there. Tell us about what they're talking about right now on CNBC.
Oh, they're talking about they call this I saw this earlier. They call this the vomiting camel chart. You see how it looks like a camel? And now it's broken. It looks like it's vomiting.
That's ridiculous. But go on. Give us your real-time analysis of that. What do you think? What do you think of their call on gold?
Now they think that won't stop until $880. Oh my gosh! I think this guy's off his rocker. That's a little bit over. If it goes down to $880, George, I think about 3/4 of the mines in the world will stop producing,
which automatically shoots the price right back up, right?
I would think. I mean, the reality is, no matter how much the market participants that are in the paper market want to push the price of gold down, the reality is that the Chinese and the Indians are buying all the gold that they can. So unless people are going to stop consuming it in China and India specifically, yeah, it would just set up a massively big move on the price of gold. I'm seeing when I hear that kind of commentary, George, and I actually read an article. I wasn't going to bring the actual article up, but earlier today I was reading someone who they were talking about the similarities between now and the late 1990s, and they hit it right on the head, George. Back then, nobody wanted to talk about gold or other commodities for that matter.
I was there. I lived right through that. I lived right through how people were saying gold is done. Let's talk about .coms. But having said that,
era,
George, was at $250 an ounce. So there was that's that bit of a difference there.
Well, you know, if you look at it from my perspective, George, which is always based on supply and demand and what the average cost of producing, it's not that much different than right now, George. You were back then, it was priced at a price where the average cost of producing was about there at that price, around $300. Now, since then, prices have gone up dramatically for your input costs, and so you know there's a lot of similarities, and that was the precursor of a 12 year long bull market for commodities. So you know I'm seeing a lot of.
So this is where you and I are going to continue this debate, though. So I'm not in the camp of 880. I will say I did make a call. You and I have been arguing about this since the early summer, where especially that midsummer, I'm going to refer to the magic date again, the day that the Malaysian Airlines plane got shot down, and that same week you had the Russian troops on the ground in the Ukraine, and then you had Israeli troops on the ground in the Gaza Strip, and gold didn't budge. And that was the day where I said gold is out right now. At least for now, it's out. And you and I would have these debates on and on. I'm going to stick with my guns, which is it's gotten down to the 1150 range, which is what I was calling for. I said 1200 for sure. It could overshoot to 1150, so I said it could, and we're there about 1160ish today.
And while you were saying that, don't forget, George, that I was also saying, if I'm off, if I'm $60 early, it doesn't bother me.
But it's not the dollar amount where I think you're early. I think it's the timing. And I'm going to continue with what I was saying earlier in the summer. I don't see a catalyst for gold. I don't think I haven't taken a close look at numbers below 1150. I'm not seeing any massive move to 880 or anything like that, so I'm nowhere near that camp. But I still don't see a catalyst. And a lot of things have happened. It went through a pretty strong correction there in the major markets with a lot of concerns about Germany and Europe and China and all these things happening. And again, gold was able to make a bit of a move, but very muted. That rally was sold hard. So I continue to say that for the next, until end of first quarter, I don't see any catalyst for gold. So what does that mean for the stock side, though? What does that mean for the stock? What's that?
What was the catalyst that started it back in 2001?
I think that was the beginning of easing of interest rates, cheap money. That was the very beginning. It was because that's after we had 9/11 and then the invasion of Iraq and all those things. .com bubble burst. That was a major impact on the U.S. on the global market, especially the U.S. So
I think
you remember interest rates back then were I think were 6.5%, 7%, and they just started chopping and chopping and chopping, and that began the worries of inflation and all that. And then when 2008 came around, it really kicked in because we had QE and we had some great lows. We got as high as what 1900. I don't think we broke 2000, did we? But it was close, 1950, right? And now you just don't have. It's not. And to be clear, the concern should still be there, right? Because the world is in a terrible economic state, horrendous. What's the difference between now and then, though, is that people perceive that the government, which is very dangerous, is going to see everybody through this. Look what happened in Japan. They just tripled the QE on Friday, right? Sent gold plunging, sent the market skyrocketing. So there's this perception that, the U.S. will print money, the Japanese will print money, the Europeans will start to decrease interest rates, and all this stimulus is going to be created, and the perception. And this is, I think, now where we're starting to get into a dangerous time, because the fact of the matter is the guy on the street isn't spending more money. She's not getting more money in her pocket. I don't care what the unemployment numbers say. Participation is its lowest of all time. You're either rich and making a lot of money, or you're struggling. That's it. There's no in between anymore. There's no strong middle class, right? Debt is high. So for now, the reasons for buying gold based on perception of this government safety net have gone away. I agree with you 1,000% that gold is as important a part of someone's portfolio today as it's ever been in the history of man, and as it's ever been the last 15 years. since the 1999 debacle and all that started. But for now, there's no catalyst because everyone thinks everything is okay. So,
well, you know, in that vein, George, what they're jumping on is they're jumping all over the U.S. dollar and stocks to a degree. But
to a degree, the Dow, S&P, NASDAQ, they're all at a record high or within a few percentage points of a record all-time high. So, not to some degree, everyone's piling into U.S. stocks, and that's starting to get dangerous. I've hated this bull, but I think we're starting to finally get into dangerous territory.
I see the valuations as pretty stretched, you know, relative to the earnings growth, George. One of the big indicators that I always look at is the PEG ratio. I look at the PE ratio and then the growth. So right now the S&P...
Yeah, price earnings growth for everyone at home. PEG, PE is price earnings, obviously. PEG, PEG is the price earnings growth that's taking place, and that's got to be slowing down, right?
Well, right now you've got the Dow trading at probably, and then S&P probably about 17, 18 times earnings, and yet the earnings are now, the last quarter, they're below 10%. I mean, that is a very rich valuation historically for that kind of earnings growth. So I see the stocks as being priced for perfection. I see the U.S. dollar being priced for perfection, and that, to me, is where the crowd right now thinks that these things are incapable of turning over is usually when they do turn over. You ask the average expert out there, you know, look at the way the U.S. dollar and stocks are trading. They're trading as if there's no possibility of them going down. That's very risky to me.
Yeah, and you know, everyone at home knows I've hated this bull market, but where you and I have differed is I've traded this market. I've been buying the Twitters, buying the Facebooks, buying all that stuff because I'm not fighting it. But
George,
it is getting dangerous.
Don't forget that I haven't always been bearish on stocks. I went very bullish when the crowd. Remember, we had that.
That was the first time you actually handed me my hat, which is true because I was the complete opposite. I thought things weren't going to go very well. And you went bullish and you knocked it out of the park that year. I mean, you destroyed it. So, yeah, you're no perma bear. For those people who are new to the show, you're no gold pumping perma bear. That's for sure. No. You just look at the numbers of everything, and you don't get too emotionally involved at the end of the day. So, with that being said, let's go into the picks. Okay, let's go take a look. Let's do a recap here. So, I'm going to bring this up for everyone to see.
Oh yeah, our past pick. Good. Okay.
All right. So you can see the picks on screen right now.
Yep.
All right.
So I see one of your big winners there was Imagine. That was a very timely pick, George. You had this is a company that's a client of AGORACOM, and your timing was just ideal on that one. Is that your best performer?
Yeah, it was. And remember, I don't normally, and I made it bigger so you can see this pretty good now, right? You can see that nicely.
Yep.
For everyone at home, what we did was we bought an equivalent of $1,000 of each. That's why you see 580. For example, using Imagine as an example, I picked it at
$1.89.
$1.89. Sorry, you're right. Picked it at $1.89. That means in order to make $1,000 worth, I notionally bought 530 shares. I normally don't ever pick clients, but the company had telegraphed that it was going to announce a really big deal, a monster deal, and it did come out. In fact, this stock was high as $3.95 on the news, so it was a monster winner for me. Came back again, which is natural. I encourage everybody. This could be one of the greatest runners we've ever had. And the next 3-4 months, you got to keep your eye on this because the company has openly talked about the goodwill, the assets are going to be put onto the. Oh, sorry guys, I don't know if you heard that. My vast virus thing kicked in. But the company is going to put some assets on the books, and the book value of the company is going to go up dramatically. They've already said that the land that they're as part of their deal is going to be worth $750 million. 60% of that, $420 million, will be attributed to them. Well, this is a company with 15 million shares outstanding. You do the math, and you figure out what you want to do for the long run. The next one that I had was the Russian bear ETF. This is a triple bear, and why? It was based on thinking Russia was having this problem with the Ukraine, and I didn't think they're going to get better anytime soon. And I picked that at $13. It's $14.85 today, 14.2% return. Russia's still going to have.
George,
Yep.
I can understand if you don't want to make a comment on the Imagine going forward.
Oh, go
Uh,
ahead, sure.
but what would your call be today on this Direction Daily Bear? Would you continue to hold that position? Would you add to it? What's your call on it now?
Well, I can tell you something about Imagine. I've got a ton of stock in that. We're holding most of it. Freed up some shares just for cash, just for little pocket money. But we're holding that. I think this is a 1-year strong hold with the risk reward being highly in people's favor. But you got to do your own due diligence. The Russian Bear ETF.
Actually, yeah, I would say to me, Imagine I think is one you could still acquire with a tight stop in it. I think if the big thing that I'm looking for from the company, George, is that they announce the financing to start building. When that happens, I think that all kitty bar the door, and I think that it's such a potential big winner. It's got that kind of really big potential because of how little stock that they got out. It's almost like one of those lotto tickets that you just got to hold, and that's why I like Imagine.
You really do. You really do. Most of the risk is off of that company now because they've got their deal signed with the Sultan of Oman, the biggest construction company in the Middle East. But I encourage everyone to do the due diligence. I won't do more. I won't say more on that. The Russian Bear ETF, it was up even stronger than ironically enough, Alan, I remember about 10 days before the contest ended, I think it had an overall gain of 22% overall, and I was gonna tweet you and say I'm gonna lock in my positions and hold them. But
oh, by the way, what was your return and what was mine? How badly did you beat me?
so yeah, so my overall gain was 8.8% right here. Your overall percent was negative 34.66%.
Oh.
So we'll talk about yours. There's a reason behind that, and we debated it that day. So the Russian Bear ETF, 50-50 coin flipped here. I'm gonna lock out that position. I'm okay with it. I'm not hearing a lot of rumblings out of Russia right now.
Okay, move on. Ultra VIX.
Next one here. This is the VIX, the volatility index. This is
right now. I like this pick a lot.
Well, if you remember, Alan, you got lucky. If you remember, this was trading at $46 last week in the middle of the week. And I told everybody when I made the pick, I said, this is going to be a huge winner because volatility is going to be big as the markets got kind of shaky at the top.
George, there's another example of how, you could make a case that the market is very overly bullish right now. They turn from
absolutely
big worry about volatility, and boom, within days, now it's like nobody cares, nobody's scared of volatility again.
Yeah. And in fact, I'm probably going to be a buyer of this or the TVIX. For those of you who want to spend less money, the TVIX is trading at about 280, 290. Same kind of function, same kind of vehicle. It's a double or triple long ETF on volatility. I think volatility is going to come back. And in fact, I talked about TVX on our show last week, where it's 290, and I said if it gets down to 260, 250, buy it all day long. But this was sitting at $46 last week. Okay, so I had some monster at 100% gain there. So if you had about another 100% on this, my return would have been somewhere in the 26% just on that alone.
That's another indicator of sentiment right now. And right now, everybody's bullish and thinking there's not going to be any volatility. Wow, that's a very fast change.
People are too complacent. That's for sure. So this tells me a lot right here. Next one up is Rocket Fuel, NASDAQ company, technology advertising company, really good company. This was positive the entire way through the entire contest up until the last 2-3 days, and then it turned negative. But good company. I'd go long. I'd be long here, no doubt about it. But it's not something that's going to, as a trader, it's not going to take off tomorrow. But great company. You should be able to do well in this. El Pollo Loco, very happy with this. This is a chain of Mexican restaurants that's starting to bust out. Think about Chipotle, but this is a junior version. They've got over 450 locations in the U.S. I think it's only going to grow. Think about this, guys. What's the Mexican economy? What's the Mexican population in the U.S. going to look like 5-10 years from now?
Well, not only that, George. There's some healthier choices in your fast
food. True. Let's look at what happened to Coca-Cola earnings and McDonald's earnings just a couple of weeks ago, right? There's a reason. 10 days ago, they disappointed big time. Why? Because people are starting to watch their intake of calories. Parents especially. Man, McDonald's used to be the go-to place to take your kids after a game, after any event, and that's gone, right? So what's happening is not only are you losing that immediate sale, but now you're losing that future customer because it's not as ingrained in these kids that they got to stay McDonald's customers for the rest of their lives, right? Exactly. So you may be seeing a generational shift unless McDonald's can keep changing its menu.
George, there's no unless on that.
They did make one big change. Remember when McDonald's about 7 or 8, 10 years ago was getting killed, and they came out those salads and all those healthy choices. So they made a run. Now they have to do it all over again because Big Macs.
If anything, McDonald's will move towards being what the trend is going to be for the long haul. People are now so aware of things like gluten and certain kind of fats and stuff like that, and sugar, and I only think that it's going to increase. So, yeah, I mean, don't get me wrong. I don't think McDonald's is going anywhere. They're going to continue to grow into the future, but these El Pollo Locos and your Chipotles and things like that, I'm pretty excited about those kind of things.
Yeah, I'd be long El Pollo Loco for the next 5 years, not as a trader, but as a 5-year trend. Great value here. Just, what I would do is I'd keep adding a little bit. I'd add 100 shares if I was a smaller trader. I'd add 100 shares here, 100 shares there, whatever you can, and just hold for the next 5-10 years. Great story there. Mankind Corporation, biotech company. This trade just didn't work out, period. There was some delays, some disappointments, so that happens sometimes in the space. So Mankind was down. So my losers of the 6 were 2. Mankind was down almost 18%, and fuel was down 2%. Too bad, because the last time around I had 5 out of 6 positive. This time 4 out of 6, just because of what happened to fuel at the end. But nonetheless, decent. Hey, if you can make 8.8% return in 60 days, you're doing all right,
Well, if you just took your 31% from the first contest, did nothing, and then tacked on another 8%, you made your year.
Yeah, well, people would love that year, right? You get paid. If I'm sitting somewhere in Connecticut right now, I'm getting paid billions of dollars to manage funds. So who knows? Maybe Alan, that's what Alan and I are going to be doing one day soon. So Alan, let's go through. By the way, the last pick here, Twitter. You see at the bottom. This is a pick that we have going towards the Super Bowl. And Twitter also last week was as high as $54. Came out some disappointing. We're not going to talk about that too much because that's a longer one. But this is my tech pick into the Super Bowl. That's down 6% right now. Versus Alan's tech pick into the Super Bowl, BlackBerry, which is up 9.5% right now. So he's got a good lead on me there, and time will tell where we go. Klondike's mine. So Alan, KDX is down 12.5%. Tell us about that.
Okay, so KDX, and by the way, George, just for the investors to know what kind of my thinking was, is usually from about September until March-ish is a very good time frame for the price of gold. It's a time when in India they're going through a lot of their traditional cultural events. It's the marriage season. It's a strong demand, physical demand period for gold, which generally means that the price of gold is going to be stronger.
Sure.
Unfortunately, this year what happened was the paper market continued to push the price down. Now, I'm not some grand conspirator thinker of the price of gold. The way I think about it is that you can go long or short any market. For 12 years, those paper guys were all over. They were long gold. They were buying the ETFs. They were filling the ETFs up with gold. And now the trade is on the negative side. And I was thinking that in the summertime it had played through the course and that it was too dramatically oversold, and so I loaded up on a lot of gold picks. Now, having said that, and as you know, I was down 34%, so obviously my trend didn't happen for me. But these group of companies, I'll go over them quickly. Klondex, new producer of gold in Nevada, low-cost producer, still a great company. I'm still thinking that gold is oversold, and in an oversold market, they call it a buyer's market for a reason. I think you want to be starting to pick away at these things, not throwing a, not jumping in all the way, but periodically picking up some quality. Well, it's a buyer's market. I think will do you well over the next year. Klondex Mines is still in that category of a really good company. In fact, we're doing a show today, and the next pick, Dow Radian, I'm picking again today. Why am I picking it again today, George? Dow Radian just came out with a preliminary economic assessment. It had very robust economic numbers, including a 36% internal rate of return, which is one of the best numbers that I've seen in the last couple of years. And that's using $1,200 gold price in their economic assessment. So it's not like they're padding it and talking about $1,400 gold, George. They're using a $1,200 gold number. They've got 3 million ounces of gold. It's got an average grade of 9.3 grams per ton gold, so it's really high grade. And this is going to be a low-cost producer with a $249 million capex in an environment where every mine sees...
Can they get that $249 million, Alan? That's the question. $249 million 5 years ago would have been laughed at. They would have got a check in no time. Can they get that $249 million today?
George, I'll tell you, no matter how bad the market is, high grade always attracts investors. And when you're talking about $249 million capex, when it's pretty likely that this thing will pay it back in the first year and a half of production, I think they'll be able to do it.
All right, Nevada Sunrise, NEV. Ironically enough, I thought that was your slam dunk pick back then because we each picked the other guy's slam dunk pick, and that was actually your worst performer. Went from 80 cents to 30 cents. I mean, what happened there? Because they've got this great project with Pilot Gold, I believe, in Nevada. So why the 62% drop? Why so bad? What happened over there?
George, if I could tell you that the gold that they found has moved, or the project they lost, or something like that, I could understand it. But no, this is one. Nevada Sunrise and Pilot Gold have one of the best new discoveries that I've seen in Nevada in several years. And I think that they've had a lack of drilling results out. That's probably what affected it the most, but I think they're getting closer to getting some more drill results out, so I'll be watching that closely. Nevada Sunrise, I still feel very strongly about that company. High grade in Nevada is a good thing to have.
Rubicon Minerals, RMX, on the TSX down surprisingly, man, 38%. I got to tell you, before, while everyone can see this list here, it's companies like Nevada Sunrise and Rubicon even more so, that are going to look like real great tax loss selling acquisitions. I think we're going to make a ridiculous amount of money on our tax loss selling show this year, but why is Rubicon down 38%? Is that all gold? It can't be all price of gold, can it?
All gold, George. All they keep doing right now is building their mine in Red Lake, Ontario. They have an extremely high grade discovery out there. They're going to start producing by this time next year. They'll be a producer of gold in Red Lake. I think that this is a company that has the potential of being the next Gold Corp in Canada. Now, if that's not banging on my desk, and yet look at the way the market is treating.
And does it get worse? Does it get worse between now and tax loss selling time? In other words, as much as you're banging the table, do I wait it out now because the disappointment is so great, the breaks are on gold? I gotta imagine, and as unimaginable as it is, I gotta imagine this gets a little bit cheaper before it gets more expensive. What do you think?
It wouldn't surprise me the way the markets are trading right now, but George, sometime you got to pull the trigger and own some Rubicon Minerals, because I'm serious when I call this the potential to be the next Gold Corp. Gold Corp started the same way as this company. They started producing gold in Red Lake, Ontario. It was extremely high grade. They made nothing but money. It was low cost production. Same thing with Rubicon. And look at what Goldcorp has done in the last 14 years. They went from a explorer to the largest gold producer in the world.
New Gold, NGD, down 42%. What happened there?
New Gold.
And I know this. I know these are all fundamentally fantastic companies. One thing about Alan is and I remember when we were making these picks, said, Alan, you're putting too much into gold. There's too much. I don't feel good about gold. And, so listen, you went for broke, right? You could have easily been up 35% just as easily on this portfolio. So, so that we don't keep you repeating yourself, did anything fundamentally change in New Gold, or is this just a gold thing and people got to add this to their tax loss selling shopping list?
Nothing changed. Still, the phenomenal management. Some of the marquee people in the business are on the board of directors of this company. It's a mid-tier producer that's on its way to being a major. They've got a great pipeline of projects. Nothing's changed fundamentally with the company, just the price of gold and the sentiment towards gold stocks. And you know me, George, that's the way I go. When I make calls, I'm all in. I don't hedge my call. I don't sort of say, well, if and or but happens. I make a call.
Yeah, you don't sit on the fence. That's what we're here to do. If we're the fence sitters, then no one would be watching at the end of the day. And I'm going to talk about your last pick, BSM, GPS and TSX Venture Exchange, down 16.5%. In fact, what was scary, and I missed it because I was out of town, the stock would trade as low as $1.25 for no known reason. In other words, for unknown reasons to you and I. Great technology company. I mean, this has got to be one of the best technology companies out there, and yet information vacuum, news vacuum, don't know what the heck was going on. So you made a nice recovery there. I'm just annoyed that I missed it at that because it got down as low as $1.25, and the next day it's $1.50. So I missed that tremendous opportunity to make money. But this is going to be a company that's going to make people rich in the long term, I think.
Yeah, that's another one that I look at a lot like Rubicon in the gold space, George. This is a company that I think has an outstanding future, that GPS. And sometimes it's not the first time I've been wrong in the short term.
So what I'm going to do is I'm going to keep these this portfolio active on my quote streamer. So you know what, you and I'll check in on this 3 months from now and see what your performance is like at that time. And because you are a bit of a long-term picker, and I wouldn't be surprised if a year from now this whole portfolio is up 50%. So we'll keep an eye on that. Let's move on over to some potential new picks here. So I got to get off the screen share. Let me close that. Alan, thanks for playing. Challenge George the God to stock picks, but better luck next time. I'm just kidding with you. All right, so let me bring up
George the God of stock picks, who I've pummeled many times, but this time I'm on the other end of the pummeling.
All right, so let me bring up the next set of picks, and I'll discuss the first couple here. All right, let me do Virtutone. All right, so this is Virtutone Networks, AGORACOM client, TSX Venture, 18.5 cents today, up 15%, 417,000 shares. You remember I talked about this last week where I cannot, especially my Canadian clients, ever make any kind of intimation. U.S. is a little bit different, but I did encourage everyone to look at their numbers, their earnings per share, their and market cap and all that stuff, revenue growth, and here we are. We're up about 20% from last week. But more important, the company put out a corporate update.
Yeah, I saw that
today after the close, right here, or just before the close. So you might want to go take a look at that quickly. And we're hoping to have Jason Allen on a CEO interview soon.
They converted from reporting their revenue on a monthly basis to each quarter now. This company is maturing quickly, right? And that's what I think you got to remember about Virtutone. They're an emerging company. They're a starting company. And, while that's happening, they go through some learning curves. And I think that was good to do that reporting. And I think that this makes more sense now.
Yep, and to remind everyone, they're doing 12, 13, 14, $15 million a month in revenue, which is pretty outstanding.
Yeah, I mean the company is more mature now than they were when the stock was much higher. It's just sometimes stocks get out of favor or underloved, and that's why you got to look at
I think
things really.
Virtual was a victim of redemptions. I think personally, Virtual was a victim of redemptions. That some fund, because TSX Ventures has been getting whacked over the last couple of months, 3-4 months, and I think funds got redemptions. And where did a lot of these guys take their money? Especially, when a lot of the gold companies weren't offering much. The high flyer techs like Virtual that was sitting at 50 cents dead smack in the middle of the summer here, or early summer. Next up, I want to talk about Timmins Gold right there. So let me bring up that one quickly. I mean, nothing more to be said. Take a look at that. I'm going to put the crosshairs on there, Alan. That's all I'm going to do. Sometimes it's just something as simple as that. This is a gold producer. Last time it got down to a buck, I really, really, really regretted missing it. I'm not going to make that same mistake again. This is a screaming buy for me right into, and this is not a trade. I'm going to hold this into April or May because they're just producing. They're producing gold and cash flow right now. They're making money, Alan, unless you got something different in terms of their economics and
Nope.
their cost per ounce. Is this a buy here?
Yep. And
All right.
it's the kind of company that I could see being a target of a potential takeover.
You took the words right out of my mouth. I'm saying by midsummer, if by midsummer you could have someone come along and say, we'll give you $2 to share, and away you go.
Something like that. Yep, I agree.
And last one I'm going to talk about, screaming pick for me. I'm actually going to make it right now. Is Santa Cruz Silver Mines. Unless Alan, you know something about it that I don't, but this is a silver producer. I have actually traded this thing a couple of times. The last time I traded it was I bought it at 85. It sold at 95, something like that, before silver fell out. But this is just too much pain right here. So I'm going to go, let's see, 2 years.
Yeah, that's another producer.
3 years. Look at this. I mean, when you see things like this, when this is the cheapest it's been of all time, and it's producing silver right now, right, Alan?
Yep. Yep.
Yeah. So silver's taking a beating. True. I'm going to go do a little more due diligence. But I mean, are they the kind of company that has any threat of shutting down their mine because the operating costs are too expensive, or what's the situation?
They're actually a fairly low-cost producer, George.
Right. So, guys, listen to this. The company at its max was sitting at $2.50, and now it's trading at 50 cents. So essentially, it's lost 80% of its price. How much cheaper can it get? You got to make an entry position in Santa Cruz. Small, I would, only because of tax loss selling, I'd make a small entry position here, at least a half. So if you're used to spending $1,000 a position, spend $500. If you're used to spending $20,000 a position, spend $10. I'm going to take a half position in Santa Cruz. You have to do it. So those are my picks. You already talked about Dalradian and why you made it your pick. So I don't think there's any need to cover it again unless you got additional information from the last 3 minutes.
Nope. No, I mean, Dalradian, I can just quickly go over it again. Did a preliminary economic assessment, robust numbers, 36% internal rate of return, $1,200 gold they're using. They've got 3 million ounces, high grade, low cost producer, and a low cost capex. This is an exciting project. I think that this one could be a takeover target as well.
Here's its chart, by the way, over the last, let me go to its 1-year chart. Got to get away from that 5-year for.
Yeah, because the 1 year is how long we've been covering it for.
Yeah, again, doing a year. So you first made this call right back here. You did fantastic with it. We've round tripped, which is why you always got to take your profits on the way up. And if you watch me on Twitter especially, I'm always taking profits on stocks, always, 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 so you don't round trip for nothing. But you do the simple crosshair test, and there it is, sitting pretty much at the bottom where it's been in a year. Having said that, tax loss selling is going to concern me. I might wait a bit on Dalradian, but from a Fennel point of view, Alan knows what he's talking about. Canadian Diamonds, KDI trades at $6 a share there. Why are you making that a pick right now, Alan?
Well, Canadian Diamonds, I always have a hard time. A lot of people call it Kennedy Diamonds. With that A in there, I think it's properly Canadian, but we'll call it whatever you want to call it.
You call it whatever you want. KDI is
Canadian Diamonds.
Wrong.
they've got a project right beside Mountain Province Diamonds, which is going to be the next diamond project that goes into production in Canada. That project is in a joint venture with De Beers. But what makes the Canadi Diamonds interesting is they have the surrounding ground around the Mountain Province ground. And in fact, this ground used to belong to Mountain Province, but they spun it out because they felt that they weren't getting proper valuation for the kimberlites that are diamond bearing on the surrounding ground. So then they've gone in and done a bunch of drilling, and the deposits are getting bigger. The grades are looking very handsome. I think that there's a high probability that this one will be taken back over by Mountain Province, because now I think they finally have got the valuation. And the strange thing is, George, as they've been improving as they've been on their own, they've actually maybe even surpassed the quality of what the other guys have that they're putting into production. So I think that this is a natural that Mountain Province De Beers will have to also own the ground that Kennedy Diamonds has again and bring it back into the overall mine plan. So I think that this is a takeover in the making. I've picked it a few times. It's done very well. Recently it's got under pressure, but now that it's trading near its 200-day moving average, I think it's a good time to be looking at Canadi Diamonds again.
Yep, and just to show everyone the 1 year here, Alan's done he's picked it for most of the year. So for most of the year, it's been an uptrend. This massive drop here. Was that bad news, Alan? That massive drop that took from 8, to 525 or so. Was that bad news that happened?
No, there was no bad news. All it is, George, is I think that Canadi started trading in sympathy with the other commodity stocks and got a little under pressure. But they're coming into their work season. They're going to be doing a lot of work and news and stuff over the next 6-8 months. So, yeah, no, I like it a lot here.
I want to show everyone the 2-year chart that I just pulled up. The bright neon green line right here. Follow my arrow, not the crosshairs. The bright neon green represents the 200-day moving average of the company, and they've been able to hold that pretty firm. So that's a really good bet. Sorry?
This was a pick way back before that big run-up.
Yep, it was. It absolutely was a pick. You made a monster call on this. Yeah. So it's held the 200-day. So there's no reason for me I'd be a buyer if it got anywhere near the 200-day. It might be a little early. I might see if I can get a little more out of it, and see if it comes down to 575 or 580. I don't think there's going to be quick catalyst to it between now and December. And that's very important timing, right? Unless you're expecting something to come out of a company like this in the next 30 days, a PEA, feasibility study, some kind of big event, there's no reason to think that it's going to take off in this next month, and you can probably sit back and cherry pick. If it got over $6.30, I'd start buying in, because it means that it's starting to gain a momentum. But this is one of those strange situations where non-traders don't understand. But I'm either a buyer underneath 575, or I'm a buyer over 630, but not in between. Hopefully I've laid out my reasons there. Brixton Metals, triple B, trades on the TSX Venture. That's its 2-year. Alan, that is 1 year. It's been an ugly year all the way.
Yeah.
But then again, from 80 cents to 12 cents means it's lost almost 85% plus of its value. So again, anytime I see a company lose 85% of its value, I want to find out if anything fundamentally wrong has happened with the company, and that's what I'm going to rely on you on. And if they haven't had anything go fundamentally wrong, I've been in 2 main situations. Companies down 85+%. You just buy it blindly and wait for a bounce, because a company can't go down 85-90% and lose much more. It's just the way it works in trading. So, Alan, what are you seeing out there?
If anything, George, it's the exact opposite. The company just had a news release out that they have their first resource calculation. It was 21.5 million ounces of silver. That's wide open to increase that amount to silver. It's high-grade silver and gold targets on this project. They've got some big shareholders. Rob McEwen from Goldcorp fame is a big shareholder. I think he owns around 10%. And then there's a big Coeur d'Alene, or one of the big silver producing companies also owns a big chunk of this company. They're in a very high. The reason that is that those big players are in there is because they're in an area where they could find a lot of silver and also some high-grade gold as well. And so, yeah, if anything, just had their best news out in the last year while it's trading at its, at its low of, like you said, 85%, 90% lower than its from its yearly high.
And Alan, I want to point something out from the technicals that I punched up while you were giving us that great overview. It's great to know that. Two things: the MACD has been below the signal line for a while. Right, it's a couple of times met up with it, but right here again, it's met up with it again. So that's a first potential sign. It's always the first sign to look for in the MACD and the signal line cross. I want to see the MACD get over the signal line. So it's there, but take a look at the histogram too, which is
just looking
the way the momentum is going. So it had been positive back here in the beginning of October. Then momentum got worse, and now that worsening is getting less and less. In other words, the pressure is slowly starting to come off. So you take this and combine it with this, and combine it with a 90% drop, and potentially you have a really great trader here. So this is the kind of thing where I would probably take, if I'd probably be bidding 10, 11 cents on it, see if I can get hit by it, but I wouldn't let it take off on me too much.
I like that call.
All right, and let's see, its low today was actually 10 cents, and its 52-week high was $3.30. So, yeah.
No, not three.
Not sure why it's saying that. Take a look here. Brixton Metals.
No, it looks like the high was a
Brixton 52-week high, 330. I don't know why. Any chance there was a stock split here or something?
Nope.
Or is that just an error?
Must be an error.
All right, must be. Because, I don't see that on the chart, that's for sure. Last one, North Arrow Minerals, NAR. TSX Venture. There's the 1 year. Pretty stable. Hey, most CEOs in the venture exchange would be dying to have a stock chart like this. Are we going for a double dip, double bottom right here at 50? What's the deal with North Arrow?
Well, it's double dip. It's also got some catalyst, George. They've got this is another diamond company. This one has got a chairman is Grenville Thomas. Grenville Thomas is the guy who also started Aber, that found the Diavik diamond mine, and the team is starting to try and do it again with a new exploration-focused diamond company. And I'm really bullish on diamonds right now, George, diamond companies. Bullish to the point that I've even joined a team of a diamond company as a special advisor. North Arrow is one of the companies that I follow closely in the sector because of the management team, also because of the team that's doing the work on the projects. Very strong technical team. And they've got some material out right now that's being going through the lab to recover diamonds. The project that rock comes from, and it's got really good chance of being good numbers when they get them back from the lab. And as you said earlier, it's got that nice double bottom, good projects, and a strong team, and well financed. These are all the things I look for. And then, while we can talk about oil being down at multi-year lows, and copper and silver and gold, there's one commodity that I follow very closely that's bucking that trend and is now trading on the highs, and that's diamonds. And part of the reason...
I was just trying to find what you're going to be looking for on my stock chart here to my right. But, how do you know? What's the market? How do you track the market price of diamonds right now?
Well, you have to follow it very closely, like I do. And you look at publications like Rappaport can give you some ideas. The really cool thing about what's happening with diamonds right now, George, is a lot of these the diamond rough. It used to be the Jewish community in places like New York where all that transactions happen.
Antwerp.
It was one of these handshake type of businesses, George. But in the last 6 months to a year, a lot of those old-time handshake business kind of guys are starting to now do their trading on computers. They're doing it in the back end they're doing their trades that way. So it's going to become more transparent for us to be able to say what's happening with diamond prices. I know because I follow the industry so close, but that's an exciting trend that I'm quite pumped about.
Okay, looking forward to that because diamonds actually are a big part of the global resource space. So it's going to be interesting to see where diamonds end up and whether it becomes another favorite. It was really in favor 10 years ago, then fallen off favor then. So who knows? Maybe with gold and all these guys remaining kind of weak, diamonds is going to be where people turn their attention to because the rich are getting richer at the end of the day, and they can afford diamonds if nothing else.
Yeah, and even you look at China and India, as the people get richer there, they're buying more diamonds. Now they're starting in the low end of the diamond curve, George. They're looking at those half a carats and unders, but they'll consume bigger diamonds in the future. And the problem with diamonds it's not a problem for me, but one of the things is on the supply side, it's really tight on the supply side.
All right. Thanks for joining us, Alan. Too bad about the result this time around, but I'm sure you're going to be looking for revenge when we have our next stock picking contest, which I presume is going to be our tax loss seller guy. I don't care if I win or lose on that one. I think we're going to be monster winners. Just going to be case of degree. Some really huge winners are going to come out of that. So I'm building my shopping list already.
I agree with you, George, because look at how beaten down these already are.
Some great companies are trading for ridiculous prices.
From tax loss selling, and they're hammered down dramatically. So I'm really pumped. I think over the next 6 weeks, you really want to be watching these, making up your shopping list, doing your homework, looking at the companies we talk about because there's going to be some big winners in there. I only pick companies. I never pick a stock play, a stock promotion. I always pick quality and how I determine it is through the drill rig, as we call it, the truth machine. And these companies that I talk about all have good results. So they're not stock plays, they're real plays.
All right. Thanks for joining us, everybody. Hope you've enjoyed the show. Hope you find it useful. I'm going to end it off with a disclaimer that I always make, which is don't make buys or sells based on what we say here. These aren't solicitations for purchase. We're not making stock recommendations. We're talking about what we would pick, why we would pick them. You have your own personal circumstances, your own risk profile. Make sure you speak to your partner, your spouse, all the people necessary, your financial advisor before making any kind of stock pick based on what you see. Hopefully, we're giving you some due diligence avenues, and you're doing the rest of the work. Otherwise, have a great Monday. Have a great week, and we'll see you again next Monday. This is going to happen every single Monday, so stay tuned and make sure you spread the word. Have a great day, everyone. Talk to you soon.
Have a good one, everybody. And as George, I think the most important thing you say in that disclaimer is that we're trying to create ideas, and it's your job to go out there and do the homework. And homework is the most important thing. You really have to know what you're investing in and why. Otherwise, you're going to make a lot of mistakes out there. So on that note, have a great day. We'll see you next week.
Bye-bye, everybody.